Ever wonder how real estate investors are buying multiple properties without showing a single tax return? It's really not magic. It's a DSCR loan. And if you're an investor or thinking about becoming one, this might be your new favorite mortgage product. So let's break it down. I'm Mike, your Mortgage Jedi. I help investors and home buyers like you navigate the mortgage world without all the fluff. Just facts and strategies that build wealth. So today we're diving into DSCR loans, what they are, who they're for, how they work, pros and cons, so that you can decide if this is the move for your next investment property. DSCR stands for Debt Service Coverage Ratio. It's a mouthful. It's how lenders determine whether a rental property can cover its own mortgage payment. If the property's rental income is equal to or higher than the monthly housing expense, including principal, interest, taxes, and insurance, you're in a solid position to qualify. What a great loan. It's a simple formula. Take the gross monthly rent and divide it by the monthly mortgage payment. That gives you the DSCR ratio. For example, if the rent is $2,000 a month and the mortgage payment is $1,800, that's a DSCR of 1.11. Most lenders want to see at least 1.0 ratio, though some will go lower with compensating factors like higher reserves or a strong credit score. So what makes DSCR loans powerful is that they don't rely on your personal income. No W-2s, no tax returns, no employment history. The loan is approved based on the property's ability to pay for itself. And yes, you can close in an LLC, which is a huge win for asset protection and tax strategy. So let me give you a real world example. A recent client of mine, self-employed with a great portfolio but very little taxable income, came to me wanting to buy a duplex. With a DSCR loan, we were able to close using the projected rental income from the appraisal. He put 20% down, had a 700 credit score, and closed in 3 weeks, all without touching his personal tax returns. It's amazing, right? This type of financing is perfect for self-employed borrowers, full-time investors, clients with lots of write-offs on their tax returns, people buying through LLCs or partnerships. Pretty much anyone scaling a rental portfolio without hitting the debt to income ratio wall. So let's talk about what you typically need. Most lenders want 20 to 25% down, a 660 credit score, a DSCR of at least 6 to 12 months of reserves in the bank, and rental property that cash flows. And again, no personal income. Some lenders even allow cash out refinances through DSCR once the property has enough equity and rent. How cool is that? Now here's where a lot of people get tripped up. The rent used to calculate DSCR usually comes from a market rent analysis on the appraisal, known as Form 1007. That means even if a property is vacant, as long as the market rents support the payment, you're good. So you're qualifying off what the property should rent for, not just what it's currently renting at. If you're watching this and thinking, all right, this sounds great, but I need help figuring out how it applies to my situation, well, that's what I'm here for. I'll break it down for you step by step. Just click the link below to book a free investor call or shoot me a message on Instagram at the Mortgage Jedi. Let's talk through your deal and see if this loan makes sense for you. So let's touch on some quick myths and FAQs. Myth 1, DSCR loans are only for pros. Not true. I've helped first-time investors get started using this exact loan structure. Myth number 2, the rates are sky high. Yeah, they're a bit higher than traditional loans, but still very competitive, especially when you're not verifying income or doing full doc loans. Myth number 3, I need a lease property to qualify. Nope. Many lenders will use projected market rent, so you can close before the property is even occupied. So What are the downsides? There's always downsides, right? You'll need a larger down payment. The rates are slightly higher, and the cash flow needs to make sense. If the property doesn't support itself, you may need to bring in some more reserves or buy it at a better price. But if you run your numbers right, DSCR is one of the best tools for building a rental portfolio fast. So I help clients like you structure these deals all the time. If you're ready to get pre-qualified for a DSCR loan, or you just want to explore options, book a call with me using the link below, or DM me directly here or on Instagram at the Mortgage Jedi, and let's talk through your next deal and make sure it cash flows from day one. Make sure you hit subscribe if this was helpful. I've got some more videos coming soon on HELOC strategies, investment property tips, and how to use rental income to scale faster. So once again, I am Mike, the Mortgage Jedi. Thanks for watching, and I'll see you in the next one. Take care.